I have to get this off me. Otherwise, it'll eat at me all day long. When you're trained with me personally, side by side, I did it in the 90s. This is how they got it. And sometimes it wasn't pleasurable, it wasn't fun, it was uncomfortable. But it's the reality. You can't do stupid shit and expect good results. Okay, you can't. And if you're trying to, oh, well, you know, come on, man. There was a loss going long. Nobody said go long. I said, watch. Trust me, there will be very finite terms where you can judge my approval, or not the approval, but the accuracy of what it is I'm looking for. Okay, I will give that to you this year. I will. I promise you that's coming. But in the beginning stages, to get everybody at least on the same foundation, whether you've been doing this for a while or not, whether you're familiar with what I do and teach, it's irrelevant. If I get everybody on the same page, knowing that we're just looking at price action, we're not trying to forecast the actual high and low. We're not trying to time in entry. We're not doing that, because this skill of finding your individual trade setup and entry, that's a unique thing. Not all of us are going to have that same entry. When we do sessions where I tell you, okay, you're going to use this PD array with your demo account, your paper trading, and I'm going to ask you all to share your chart where it shows your entries were in and out. Most of you will not want to do that because you think it's a report card and it's not going to be good enough. And you're going to be scared. You'll maybe share it and you'll see other people doing better than what you did, and you're going to delete your tweet. Don't do that. You're robbing yourself of the best opportunity how to learn this. And when it's uncomfortable, that's exactly what it's supposed to fucking feel like. Every time that you push a trade, when you want to get into a live account, when you trade your funded accounts, guess what you're doing? You're casting your opinion into the abyss of that hard right edge, and you don't know what the outcome's going to be. So you have to desensitize yourself now while everybody's doing the same thing. Nobody's better than the other. You're all in the same stage of learning. Regardless of how long you've been with me, if you've been profitable, funded, I don't give a fuck. This year's mentorship is different. If you can't recognize that, even my charter members are thinking, this is something totally different. Yes, this is the brass tacks. But I also know that this type of training is going to weed out the people that are not going to do well. And it's going to do it quickly. But I don't want to see any of you fall behind. I don't want to see you fall victim to yourself, your own character flaws, before you have a chance to cope and manage them and replace them with more positive characteristics of a trader or speculator. Everything I'm saying does not translate to an entry. It does not translate to a trade. What you're doing is seeing those moments in price action at the times I'm prompting you to look at them. Study it. See, does it do specific things that you are expecting based on the things I teach on my YouTube channel? The order block shouldn't do what? Shouldn't go past the mean threshold. What happens if it does? That's a warning sign. Then I mentioned the volume imbalance below it. What happens if it goes through that? It can do that, but guess how many PD arrays now is failing? 2. And I said the bullish breaker. Well, if it goes below that and shows no willingness to support anything there, what is it indicating to you? It's going to want to do what? Expand lower. Seek discount. Go look at the tweets, folks. That's why I'm doing it. I'm confused. I can't follow your tweets. Then wait until the session's over. Go back, take every individual tweet and place it on your chart, and it'll make perfect sense to you then. I'm telling you, that's how you're supposed to be doing it. For those that are here watching it live, you have the benefit of just seeing it and looking at it over your chart real time. But there's no disadvantage for those that can't do it. because you literally can take that tweet that's time and date stamped, plot it right on your trading view chart, and you'll see where I was pointing your attention to and how we are watching how it's going to reach to the next level. Then what are you supposed to do with that? What's the benefit? Once it goes there and I say, okay, screenshot this, what are you supposed to be doing? You're supposed to be looking at how much time it took before it repelled away from that level, started gravitating to another level within 5 handles. Does it offer a range of 5 handles? If it does, was there a setup in there that you can identify? What do you mean? I thought you were supposed to tell me. I'm telling you how to find your setup. Using the things I've taught, what pattern exists in that price run? Well, in the fair value gap that I mentioned this morning, using the 650 candle, time candle, 10 minutes to 7, basically, in New York local time. I mentioned I want to see that fair value gap act as resistance. Then the market does what? Creates a up close candle into that fair value gap. Market moves away, comes back up again, and it spends multiple times trading into the midpoint of that up close candle. For those that have had the charts in front of them, it's the 10:05, 5 minutes after 10 candle this morning. That one singular up close candle. And the subsequent candles after that, it was trading up into both the fair value gap low from 650's candle. And then we had what? Expansion. Reaching down into the fair value gap I mentioned below it. Seeking what? Discount. That candle is formed at the 650 time candle on 1 minute chart. It trades down to it and then blows out the low. And I said, you want to screenshot this and label it 50% of the trade off here. But I didn't take a trade. You didn't take a trade. Oh, what are we doing with all this? You're conditioning yourself and you're logging it. When I teach you how to journal, I told you, you're giving yourself positive self-talk. You are conditioning your subconscious after the fact, using the points of reference that I'm giving you real time. As the chart creates these specific things and it draws to the levels I'm talking about, you're screenshotting that. And then you're adding all your observations later on. Not then. You don't have time to do that. You're watching price. Price gravitates all the way back up to the imbalance, which I was losing my shit when I was reading these tweets. At 9 minutes after 10, that fair value gap on the 1 minute chart, it comes back, reprices to that, does not come back up to the fair value gap formed at 7:05. So 5 minutes after 7, that candle, that's your fair value gap. That was the one I drew your attention to first, below the breaker, below the volume imbalance, and below the 5 minute bullish order block. So we saw price spend majority of the time within the first 30 minutes in the upper 50% of that 30-minute range from 9:30 to 10 o'clock. And it did what? It failed. It failed to take 40/20.75 buy side. It couldn't do it. And then it showed a willingness to do what? Go out below the low of the first 30 minutes of trading. So what we're doing is we're giving the market time to run on buy side. In the first 30 minutes, you don't know what it's going to do. You don't know. So how do you learn to trust these things, ICT? How do you do this and how do you do that? By doing what I'm walking you through in these tweets or in the live sessions. But some of you don't want to learn. You want to be spoon-fed, and then you want to lie to me after the fact. But ICT, you don't understand. This is what I'm really trying to do. No, you're full of shit. You're trying to take a trade. I guarantee you've probably taken 3 trades this morning, and you regret it. And then the move that unfolded, you weren't part of that, and you feel regret. You feel like you got confused and tricked, and I didn't tell you exactly what you wanted to hear. When I'm telling you what you need to hear. I'm telling you what you need to study and observe, because you don't have the experience to know what to do in that first 30 minutes. So the first stage of your learning is submit to that first 30 minutes. That's part of this. That first 30 minutes is much like a Asian session in forex, whereas Asian range, rather not Asian session, Asian range is several hours in length and time. But the first 30 minutes after midnight New York local time, that's an opening range too. But at 9:30, I'm looking at that opening range. And we've had a large trending day yesterday. We had a large range expansion to the downside. We had our targets reached. So the next morning session is going to be more difficult than it would be on another day. So you have to be very, very careful and demand more insight, more information, because you don't want to be what? In a hurry, impatient to go and chase something. So you have to have a filter, a time filter. You allow for that first 30 minutes. But what happens if it takes off and runs 25 handles? You fucking missed it. How about that for logic? But you don't want to accept that because you want to be able to do every fucking micro move. Just because you watch some videos. You think that's what you're supposed to be able to do. And that's bullshit. Nobody said you're supposed to be doing that. I sure as hell didn't say that. So you have to have realistic expectations. You have to be diligent about what it is that you're being told to do, what not to do, and live in that. Allow yourself to develop under those controlled conditions. You're safe. It's okay to make a mistake. If you have an opinion about, okay, Michael's saying, watch this level here, and he's pointing out something below the marketplace. Okay. So is it showing me anything in there that would lead to a trade? If you don't see it and price moves, you'll go back and find it in hindsight, and that's still learning. But you don't want to be pushing a button thinking you understand what I might be hinting at when I'm not hinting at anything. I'm just telling you, watch this level here, note this here. These are areas I'm watching on my own chart. I am not putting things out there that are ambiguous, that mean nothing. I'm drawing your attention to the very specific things that I'm utilizing to determine a bias within a narrative. The first 30 minutes, if I don't know right away what it's going to do, I'm submitting myself to that first 30 minutes myself. I'm doing that. But if I have an inclination that it's going to do a specific thing, run for a liquidity, run for an imbalance, then I'm going to go right in there. And as soon as it does it, if it's in the first 30 minutes, I'm in there. I'm doing the trade. But we have a large range day yesterday, and everybody's going to want to do what? Jump on board. So the market will, most times, not always, most times, reach for some measure of buy side. Why? Because if it's going to go down, like I said yesterday, it can go up the purge buy side to allow smart money to assume shorts against that buy side liquidity. I was offering the market the opportunity to present to me and you by highlighting that 40-20.75 and 40-24 levels. If it doesn't reach there and you're in the first 30 minutes, nothing has happened. I gave you 3 specific PD arrays to watch and observe. You know, if you've been paying attention and taking notes, for the folks that know I've said this, do me a favor and tweet to me. Yes, you have said if 3 PD arrays fail, that's problematic on a bias or a directional view on price, and it's going to most likely go the other direction. If you know I've said that, please tweet that and say you've heard me say that, because I know I have. I haven't just said it one time. I've said it multiple times. But if I say order block or fair value gap or volume imbalance, if you're here to find something to talk about that didn't happen correctly, you're going to have a whole lot of opportunity to do that erroneously. Not everything I'm referring to is an entry. There are measuring points, balance points, points of reference. That way we see what is the ebb and flow of price? Is it respecting this level? Is it not respecting it? If it goes through it with a lot of speed and magnitude, that is also a characteristic that is important. When we had price return back to that fair value gap at the 9 minute after 10 candle, 1 minute ES, came all the way back up, touched the bearish order block, spent about 4 or 5 candles in there, and then repriced lower, then made the lower low. As it was dropping, I said that we want to see it go through the fair value gap from 650 time candle, and then offer, if it comes back to it, resistance. Now it went through the initial low at 1015. So once it takes out that low, we're not interested in seeing it return back to that fair value gap then, because we've expanded and made another lower low. So there's no need for it to come back to that fair value gap that's formed on the 650 candle. To come back to that level is problematic, which is why I said that hypothetically your stop loss on this idea would be 4000.5, or 4,001/2 of a point, to which it returned back to, but not before trading to 39.91 to offer a partial near the low. So 50% of the trade idea that you're logging, you may not have seen the setup, but you know the logic I'm talking about because I'm mentioning it in the tweets. Once everything's done, you take that information, go back into the chart, and you study. What do you see? What do you see? For some of you, you're going to see the consequent encroachment of the low in the candle formed at 9:30. 9:38 rather, sorry. And the market trades up into that fair value gap I mentioned, around the 4,007 level is what it is price-wise, but the actual candle for the fair value gap is at 5 minutes after 7. Some of you may see that retracement back into the fair value gap after it made the lower low. That's your optimal trade entry. Leaving the range of that first 30 minutes. Not expecting it to come back into it. It doesn't need to. It's done its work by staying in the upper half of it and then failing to go to buy side. It ran out below the low. Okay, so what does that tell us? From a narrative stance, it says it's going to be seeking discount. Price will explore going lower into inefficiencies that are below market price, which is why I took your attention to the candle at 650. That's your fair value gap that was below price. And then the old low. And then once we went through them, 50% of the trade comes off. Why? Why? Because it could go down and take the low, make a lower low, put people on the wrong side selling short on a breakout, and then come all the way back up against the entirety of the daily range.